Hello, everybody, and welcome back. Medical technology is making rapid progress these days. Healthcare is therefore considered one of the growth themes, especially in emerging markets. Liontrust manages a specialized India fund. Today, we talk to Ewan Thompson, fund manager of the Liontrust Emerging Markets and India funds. Welcome, Ewan.
Hi, good to be here.
Ewan, with your expertise in emerging markets, and this includes India, could you share your insights on the investment opportunities available in India's healthcare sector?
Absolutely. We see India as one of the most attractive long-term investment opportunities within emerging markets. And a number of those structural factors that are very appealing specifically also apply to the healthcare sector. So longer term, as has been widely reported, the demographics of India are extremely attractive. India has recently just taken over China as the largest country by population in the world. But although that's true, it's actually more the construction of that demographic which is the most important here. India is a very sort of rural economy, but that's increasingly changing as people move into urban areas. So only a third of Indians live in cities. Compare that to half of Chinese. Moreover, Indian GDP growth is very strong, so per capita consumption is also growing. And as people get richer, they want access to more products, more services, and that includes healthcare. So rising incomes are really driving the availability of healthcare. And then the key point here is that India's healthcare is very underpenetrated. So incredibly, there's only half a hospital bed per 1,000 people in India. Compare that to over 4 in both China and Europe. So there's only 75,000 private hospital beds for a country with nearly 1.5 billion people. So we see that penetration increasing over the next decade.
Considering the long-term positive growth outlook for China, what specific factors make the Indian healthcare market an attractive investment proposition? And are there any particular subsectors that you find promising?
Sure. So I think when you look at the Indian healthcare market, you can broadly break it down into a number of subsectors, and there would be the domestic pharmaceuticals market, the export market, particularly to the US, kind of generics, pharma exports to the US, diagnostics, which is kind of labs, testing. And then the final one is hospitals. And we actually find the hospitals one of the most attractive longer term propositions here. The hospitals, as I mentioned earlier, are very underpenetrated, very few available beds. But even more importantly, it's very difficult to get those hospitals up in the places where they're needed. And there's a lot of demand, but particularly in urban areas, you need a certain amount of land available, which is very difficult to get your hands on. So those companies that do have access to land and are able to capture that growth are able to command significantly higher returns on their investment in the hospital sector than in some of the other subsectors. So we find the combination of strong demand growth and also kind of captive demand in urban areas and the lack of supply means that those players who are in a commanding position have a really good kind of protective moat around their business, which allows them to generate high returns over the longer term.
So as a portfolio manager, what criteria do you apply when evaluating healthcare companies in India? And how do you assess factors like financial stability, competitive advantage, or growth prospects of those companies?
Yeah, across the portfolios, we're investing into all sectors. So really, we treat the healthcare sector as we do others. And what we're looking for is to establish which companies in that opportunity set are what we call emerging leaders. And this is basically a combination of attractive factors, one of which is we want them to have a structural growth opportunity in the underlying market, favorable industry dynamics, for example. And we believe that the healthcare sector scores very well on that. And that's kind of what I was saying earlier about the underlying growth opportunity. We also want to see a kind of protective economic moat around the business. And again, as I mentioned, particularly the hospital sector gives that in India. We also want to make sure that the financial returns are sound, so the companies are able to generate above average returns, but most importantly, are able to continue doing so over time, enabled by having that moat around their business. And finally, we want to make sure that they have the financial resources to invest so that they primarily using internal cash flows to drive their business forward, and they're not reliant on external capital. So a strong balance sheet enabled to facilitate the growth which is on offer in a fundamentally attractive market. So that's what we're looking for in all our companies and also in the healthcare sector. And we think that the Indian healthcare companies themselves really do screen very, very well on all of those metrics.
So healthcare, or at least part of this industry, are regarded as capital intensive with long development cycles. So how do you manage risk of your portfolio part that is investing in healthcare?
We really think over the longer term, the key risks here are sort of operational risks to the businesses that we're investing in. And that's why we really think that, again, those protective moats around the business are so vital, because it enables the companies to invest for the long term in the knowledge that they have those financial returns available to them and are less likely to be disrupted by newcomers. And again, particularly in these sectors I've talked about, they're very capital intensive to get into, which means it's much more difficult competition to come in. The regulatory environment is very stable, so we don't see huge numbers of surprises coming in that direction. Moreover, once companies are established, again, coming back to the hospital sector, a lot of them are able to then operate on a capital light model, which is even more capital efficient. So other players find it difficult to get in, but those that are in there could often use an operational model, which means that they invest alongside others or really manage properties for other people. And that, again, that boosts up their return on capital employed. And that, for us, means that the operational risk becomes decreased over time. And that's really what we want to see in our companies. Sort of few surprises from either the government policy regulation, but also from industry dynamics. And we see it pretty stable in this sector.
What is the impact of recent regulatory changes or reforms in India's healthcare sectors? And how do these changes influence your investment decisions? And finally, do they present more of a kind of opportunity or challenge to you?
Absolutely. And I think that one of the most attractive features of the Indian healthcare market is really a very stable regulatory regime. So when we look at the private sector operators, both on the pharma level and on the hospital level, these companies are really left to their own devices. There are obviously some constraints. There are certain prices which are monitored by the government, but these are largely allowed to appreciate in line with WPI. So, for example, that's been quite high recently, but they have increased. Drug prices have increased, up to 10% in line with WPI. Moreover, we've seen that after COVID, one of the states, Maharashtra in India, wanted to put on price caps on COVID-related treatments. This eventually went to the High Court, and the High Court actually threw that out to say, unless the government had specifically given sort of land parcels or something an attractive rate to companies, it's not really the government's business to come in and dictate pricing. So I think that really underscores the fact that the government is very happy for policy to remain attractive to business. And I think that's certainly very reassuring as an investor looking at the sector, which in other countries can certainly be much more sort of micromanaged by the government. That said, there is a sector of Indian pharma which is more the exporters, exporting generic drugs, particularly the US, and that's where maybe you do see regulation more of a threat. We see that the political drive to reduce drug prices in the US is strong. So you see constant price erosion in the US over time. So that's a much more challenging environment on a policy perspective. So we've got a preference for the kind of domestic facing companies, both in the pharmaceutical sector in India, but also in the hospitals, to avoid some of those policy headwinds.
How do the healthcare markets in India and China compare? So are there any notable differences or similarities? And do you see any divergence in market performance between those two countries?
Well, I think this really follows on nicely from that point about regulatory environment in India that we find so reassuring. And I think this is, I guess, a wider point about the comparative investment climate in India and China. China has had a number of industries that have gone sort of under inspection by the government to root out corruption, to make sure, for example, that companies are operating in the best interests of the ideological direction of the government, for example. We even recently, as of this week, seen the government step in with corruption probes into the China healthcare sector. So I would say that the key difference from my point of view as an investor in both countries is that in India, the regulatory regime is pretty clear cut. The government is committed to growth of the private sector. And in China, it tends to be much more regulated. So, for example, in China, there's a much more stringent government mandated list of drug pricing, and everything's very dependent on whether you get onto that list or not and what those prices are. Whereas in India, it's much more of a free market. So I think that in terms of that background, India presents quite a different opportunity. I think also just the structural growth in terms of penetration. I've mentioned earlier that the number of beds per capita is so much lower in India. We think that longer term runway is more obvious, and this is reflected in the much higher returns for companies in terms of the return on investment they get. It's much higher in India. So we definitely see a longer term preference for the Indian healthcare sector over China.
How do you stay updated on developments in the Indian healthcare market, and how important is research for your investment process and picking the right stocks?
Sure. I'd say that really research is got to be the center of everything we do. I'm based in London, but get out to India as often as I can. I've just been there a month or two ago visiting some of the companies that we've got in this sector, particularly Max Healthcare. Went out to South Delhi, visited one of their new projects to get on the ground, as well as meeting not only the top management, as I do regularly in London, but also meeting the kind of operational managers, at the facilities and seeing things up close. So I think that's vital. Just for example, I mentioned how hard it is to build new capacity in Delhi. There hasn't been a new hospital, a brand new hospital in Delhi for 15 years. So being on the ground, seeing the little parcels of land and how they'd sort of been creative to join them all up, I think that's really vital to just to see that firsthand. Obviously, on top of that, we're constantly engaging with management, whether I'm in India or they're in London, or whether we're doing it over Zoom like we are now. So I think it's absolutely critical to be engaged and keep up speed. And we've done that as best we can through the COVID years, but now that's passed. Good to be back on the ground in India itself.
So this was Ewan Thompson, fund manager of the Liontrust India Fund. Thank you very much, Ewan, for being with us today and sharing your insights into investment opportunities in India.
Thanks so much, Thomas.